I'm glad that we caught a moment of my wife barking at me. What's going on, guys? We are live. Hopefully, you're having a great day today. Just watching the sunset here in Buenos Aires. It's really beautiful. I hope everyone's having a great one. We're going to jump
What's
in
going on,
here
guys?
to
We
some
are live. Hopefully, you're
analysis
having a
on
great day
a
today.
few,
Just watching
oh,
the sun.
a few tech companies and some AI companies that we're watching right now. And it's a little earlier than we normally do our live sessions. I think we're probably about a couple hours early. But we got some things going on this evening, so we're going to jump right into it. And I'm going to go ahead and take a look here. AMD has been running up recently, and we've been watching the chip market pretty closely. And we saw a lot of reasons why this has happened. We've been looking for this AMD run for quite some time, and AMD ended up running to $259, nearly all-time highs. They luckily didn't pull down further, and they actually held up here at that $250 price point. And so a couple of reasons why I wanted to go over AMD, because a lot of people, look at it and they say it's way overbought, it's way up to all-time highs. And Elvis, I see that Redwire and Lunar, we'll go over those for sure. But when we're looking at the growth of the AMD market, right? We're looking at some chip stocks right now that have been growing pretty fast. And I don't mean growing just like interest of investors, everybody's talking about them and buying them like that happens. But ultimately, when you're looking at AMD, they're a company we've been covering since before a lot of people talked about them, because ultimately we were covering them for the data center move. It was back here in the middle of 2024. They started shifting from gaming and things like that, GPU, to the GPUs in data centers. And then shortly after that, they continued to sell off despite doubling their revenue. Okay, so they were coming in with revenues here of growing revenues this last year. You saw them come in 2024, $25 billion. They were growing, doubling their revenue, but still selling off. And then if you look, what we were talking about, there's a few things. Number one was the Starlink. A lot of people still are not talking about this, and I think it's one of the single biggest advantages that AMD has over, for example, NVIDIA. There are some instances where Micron could be a good play. I see that RCAT could be a good play. Matt, appreciate it. We'll take a look. And BITF, we'll take a look. They got earnings tomorrow. But AMD stock providing the microchips for Starlink. I know, if you look at it, it seems like we're the only person talking about it at this time, but it's still not being talked about. And it's still a big deal because Starlink is really one of the most innovative space tech companies in the world as a part of SpaceX. And AMD not only doubled down on data centers and saw more investments from companies like Apple and Microsoft, but they also acquired a software company that's related to the inference running, the architecture, GPU architectures that run software that's able to run AIs faster than SGLang, which is the kind of main way that AIs run. And so on the right, you can see SGLang. This is both running on a MI210 AMD GPU here, this stack. And on the left, it's much faster. On the right side, it's still slow. Now, people say, well, it's still overbought. I see Michael says AMD is overbought and just overvalued. PE ratio always drops. Looks where the shares was trading on Tuesday. And I get it. I get where we're coming from with the AMD run. But when we're looking at the financials, yes, PE ratio is high, 127. That's a high PE ratio. Warren Buffett looks for 20. So yes, the PE ratio is high. Could it pull back? Most likely. It could see some pullbacks. But we can't really discount the fact that this company is growing revenues by 35% a year. And we're not talking about 35% a year and they're only at 100 million. 35% a year and their revenues at $9 billion in a quarter. So they're actually, if we look at their annual revenues of, they're getting up to that $30 billion a year, 35%. I mean, we're talking about they're adding about $10 billion in bottom line to their revenue every year. And so that combined with the disciplined balance sheet that we've seen, I think AMD's it's coming. They are one of the top competitors with Nvidia, and they'll continue to build that out. And I think the fact that they're already in Starlink is pretty good for them. And so as we see them start to make some runs up into $400 billion market cap, if they're gonna be a $1 trillion company and they're gonna make that run, then you wouldn't want to miss it probably. And so this is one of those AI companies. I know there's people talking about the bubbles this, the bubbles that, but you have to understand, like, the value creation is not this airy cloud, esoteric, fake thing, this AI. This is a very real value creation. There's a reason that they're working with SpaceX. It's because SpaceX is saying, hey, we're okay with launching these semiconductors up into space for the next 30 years, for the next 40 years. But they're still overvalued on the PE ratio. So I get it. And so nearest support level, if they sell back down for AMD, is going to be around this resistance level. But personally, regardless of being high or low, we've continued to add to our positions. We have over 150% on AMD returns and over 140% on AMDL. And frankly, I think that long term, this company is going to be great. It's going to continue to grow as they are gaining some more momentum after losing it to NVIDIA. They've actually come back in a big way. As demand has surged, they've become one of the main companies that companies are relying on. All right, so next companies we got was Redwire and Lunar. Let's take a look at those. The data center plays today have been interesting as well. We saw some pullbacks. BITF is reporting earnings tomorrow. Let's take a look here in Stockmates. Is that tomorrow they're reporting earnings? Let's see. Some activity there. Saw your message there, Matt. Tomorrow Bitfarms is reporting earnings, so we'll watch there. And let's jump into the tech of space real quick. Let me open up the watch list, our space tech watch list. Space tech watch list. And we're going to look at LUNR for Elvis here. We'll start with LUNR. Personally, I'm quite bullish on this company, LUNR. We have seen this kind of uptrend take place with them. They recently pulled back down. I think they're in a very nice position. Last time we were covering them around this $8 range, we were looking for a continuation up into that $13 range, which was very large at the time. It was about a 40 or 50% recovery. It took some time, but they did make that 40 or 50% recovery. You can see this kind of overall uptrend starting to develop here with LUNR. And they signed some recent deals just in the last few months. So if we take a look at Space Tech, let's take a look at LUNR. Gonna have to add another folder for all of the stuff we have on LUNR because we have quite a lot right now. That's not the right folder. LUNR, stock, those are thumbnails. Here we go. So Intuitive Machines, they're a space tech company that's building infrastructure, and they're doing it in a way for most space tech companies to be a little bit worried about the competition, because they're one of the main contractors that's working with NASA to deploy to the moon. And payloads, delivery services, commercial access to the moon is kind of the main goal with them, and they work heavily with NASA. You see their revenues are around $50 million a quarter. Not so bad for a small space tech company. Annually, they've seen their revenues increase by about 185%, 186% to over $200 million. And in 2025, they're on track to do over 200 million. And their net income was actually positive last quarter, and then the quarter into June was a little bit negative. Their balance sheet is positive. They got 475 million in assets, while their liabilities are at 184. I remember when, if you're looking and you're kind of struggling to identify deals in space tech, one thing to note, because they have sold off over the last month, you can see they're down about 23%, is the market cap's at 1.6 billion. If they have here the growth in the assets up to almost half a billion, they're making about 200 million a year. This market cap is still fairly low for a space tech company. And if we look at their growth as of recently on LUNR, they kind of have pulled back down from this $15 range into this level of around $9 a share. So $9 a share is kind of where they potentially bounce, and we'd look for them to recover back up into these ranges of around 15 bucks a share. And that's a 50% margin for profit. Now, in the near term, you got defense contracts very kind of volatile right now. So when we're looking at the charts specifically, that's kind of what we're led to believe is, hey, this could be that support level, kind of a rising level for LUNR, and that they would continue back up into this $14 to $16 range. But the financials, they look pretty good. We see them increasing. The chart, it looks pretty good. It's right at a support level that you'd probably want to manage risk if it didn't continue the pattern, but you'd want to potentially look for that 30 to 60% potential continuation of their uptrend. But at the same time, you got to look at some of their news they've come out with, because one thing they just announced was a new contract in the last few months. They've had quite a few new contracts. You could see some of their infrastructure they're building for space tech. And they secured an $8.2 million deal with Air Force Research Laboratory. They also here creating next generation commercial. You can take a look at their recent press releases. They got an $8.2 million deal there. They had another $9.8 million deal, if I could find it. I don't think it was July. I think it was actually more recent than that. You can find it here. Not sure where it is. Are these press releases? Not sure if I'm looking in the right place, because I know they also had another deal they signed. But yeah, they're a growing space tech company, and when I saw some of their tech at the space conference in Colorado Springs, it seemed like they were really on the right track to continually be one of the top companies selected to deploy more infrastructure onto the moon. And so I love that industry personally. I think it's a really great market to be in, so continue to invest in it. And then same thing with Redwire. When it comes to Redwire, Elvis, Redwire has had their financials in a really good place. They're a space tech company. They've sold off about 2% recently. They're around that $6 price point. You see them selling off. If you look on this level, they're back down to all-time lows almost, nearly, Redwire, as they continue, and they've had some ups and downs here. But they're at $985 million in their market cap. They're making $100 million per quarter, and their balance sheet. So again, 985 million market cap, and their balance sheet is at 1.45 billion in total assets. So they're actually in a really good spot for their assets. So guys, I'm going to wrap up the session here because we're going to be having some dinner with family. So I really appreciate you all. But when it comes to Redwire, Lunar, I'm personally holding. I'm going to continue to hold on Redwire, continue to hold on Lunar. And at any point during this, if we see the government reopen, you're probably going to see Redwire do really good in the near term. So that's kind of the deal with them. And yeah, that's going to be it. There's a DoorDash partnership with Serve Robotics. Ooh, that's really good. Serve Robotics came out with earnings today. That's going to be a big one because Serve has been doing, they were delivering food for us in LA when we went there. And apparently they just came out with their earnings. We were looking forward to that after hours today inside of Stockmate. And they just came out with the earnings today. And I got to check this before I roll. Hope you guys have a great afternoon here. See the robotics watch list. Let's see. Serve is down 1.5%. And their earnings came out today. and they grew their volume, 10x revenue growth projections, and 1,000 robots deployed. Revenue was super low. Fleet revenues were low. Balance sheet increased and maintained a strong balance sheet. So they're doing good. That's kind of a startup robotics company. I like them a lot better than Rich Tech. I think they have literal robots on the street, so they're in a really good place for real world usage. Awesome, guys. Hey, I appreciate you all. I'll get some more stocks out to you guys very soon. We did do an analysis today on APLD in the data center market. If you want to check those videos released, we also did a video on Big Bear AI and some of the defense market. You can find that on the YouTube channel today. Appreciate you all, and I'll see you in the next video. If you want to join us in our daily live trading sessions, it's the second link below to tune on in tomorrow morning at market open. See you in the